Hey guys, how's everyone doing? I'm about to start our weekly big picture trading review. I'm going to climb down here. A little muddy, so hopefully I don't take a spill while I'm walking down here. We're going to talk about the trading week, the good, the bad, and ugly, like we do every week. You can see my notes here. I do this every weekend. On a macro level, not really analyzing the market too in depth in terms of looking at setups, but just thinking about how trading went the previous week and what we can look forward to, the good, the bad, and then our key takeaways. So we're going to do that in a second here. Let me climb down to the edge of the cliffs here. There was a sign right up there not to come down here, but we're rebels. We're going to go for it. So a few seconds here. We'll talk about some of the profits we took this week and a couple of the missed moves that I wish I would have taken, but I'll learn from it now and won't make the same mistake again. Thanks, Mike. Yeah, I'm being as careful as I can here. So we are at the edge of the Pacific Ocean here in San Diego. So let me find a good spot here to settle in. I think we've got a good spot right in here. There's a beach right down here, you can see. And I just climbed, as I was talking to you guys, I just climbed from right up there. I went for a jog up here. There's some nice trails up here. So I've got my jog done now, and we're gonna talk trading. So let's get up to the edge here. It's not really as dangerous as they make it sound. Although a few people do die here every year. But it's usually people who go up to the edge over there or over there and fall into big waves. And the waves aren't too bad today, even though we've got a lot of rain and wind the past few days. I do not see any surfers. Usually there's a ton of surfers out here. But anyway, okay, let's talk big picture trading. Number one, the good, I was happy about being patient and not chasing some of these moves. Now, I did miss a couple of moves that I wish I would have taken. But overall, it's best not to be chasing. When you get a breakout, stuff gets extended. And usually when you enter at that point, that's the worst spot to be entering. So I was happy about that. Number two was the profit taking in BA, Boeing, and FAS. I wrote FAZ here. It's actually FAS. That's the financials ETF. Now, BA was a 2017 entry. Earnings breakout. We've been trading a lot of earnings breakouts to start the year. And so far, they've all been working. I've taken probably 6 or 7 of them at this point. We've taken a few profits. We've got a few that are running, and FCX is the only one I'm a little disappointed with, but we're still in the position. So happy with the BA trade. We got nice profits there. I thought about playing a bigger move, but we took profits at the top of the range, which looks like it's working out well. And we can always get back in if it breaks that range. And then FAS, we had to be really patient with. It was an entry from 2016. And there were a couple of spots where I got a lot of emails from report members about getting out of the trade, and we stuck to our stops and our targets, and throw the book into the ocean, please. All right, I've been tempted to do that a couple of times here when I was a little disappointed in my trades, but no, we're going to keep the book here. All right, so I was happy with those trades. And we took a couple of entries this week in Under Armour, UA, and X. And those are two specific setups that we stocked, and we entered at good spots. So Under Armour, UA, that one was a gap down reversal. For those of you who need more on that, go to Bulls on Wall Street, the blog. We've talked a little about that setup with Amazon and Google. And I'm actually in Google right now, which is the same position. Our same setup. So Under Armour, we got the reversal. It seems to be working well. And then X, that's the steel stock. Now, I got a lot of questions when I entered that one because it is on a longer term time frame a little extended, but these momentum stocks and sectors can move much farther than you would expect. Owlhead here is feeling bad for me because I'm a 49ers fan. I'm pretty optimistic with the new coach we've got here, so I think things are going to turn around. Back to trading, X. We did get a 5-day consolidation. I like the way it handled the 9 EMA. You can pull it up if next time you've got some charts in front of you. But I like the way it consolidated. Now it's low risk, high reward. So essentially I'm risking about $600 with the potential of making about $2,000. So I'll take that every time, even if we're a little extended here. Essentially, when I've got 600 versus 2,000, that's about a 3-to-1 rate there. So essentially, if I'm only right 35 to 40% of the time, I'm still going to make money. And that's the type of trading I want to do, where I'm not focused as much on my win rate, but the type of wins I'm getting. And that's what you need to do to be a successful trader. Finally, related to my day trading, I was happy that I was really locked in this week, trading the right stocks. So, sometimes you've got a setup, but maybe you're going to make a 1R or a 2R gain off it. I was able to lock into CGIX and ZAIS, which were big movers, and had some nice gains. And those two trades right there, for day trading, pretty much made my week. So happy about that. So that's the good. And now the bad. And we don't shy away from the mistakes. We're always going to make them. There's no trader alive that is perfect. And usually we're probably making more mistakes than we do capitalize on opportunities, but that's okay. So the biggest mistake, the one that I almost broke my mouse in anger about, was missing the biotech trade. Biotech has been on a fantastic run, and what I did with biotech that got me a little bit was we've been talking about biotech. In the trade report, we laid it out. It was in the focus list. Check out that bird right there, guys. What is that? That's just a seagull. For a second, I thought it was a bald eagle. But biotech. We were stocking it. I had an entry level for the biotech ETF. Guild is fine. It trades like a bigger stock. Got a comment here about Guild, but I'm going to go with the ETF because I feel I can make more off the ETF. That's LABU, the triple leverage ETF. It's really volatile. I got a little cute with that. So we had laid out the moving average breakout. It did that. I didn't take it because I wanted to pull back, and basically I wanted to save about 50 cents on the entry, which would have, with my position size, would have equated to about $500. But looking back, I probably should, hey, that seagull's checking me out here. I hope it doesn't, we don't get attack of the birds here, but it's only one. We're all right. It's making me a little nervous there. I got a little cute. I tried to get a more of a precise entry. Obviously, I should not have done that. So the lesson, we'll get to takeaways in a second, but I probably should have just entered on my entry level that I talked about and not tried to get too cute with the trade, and that caused me to miss the move. And as you guys know who follow me, I do not chase. If I miss the move, I'm not going to enter where I have poor risk reward, even if it could go higher. I'll wait for the next move up there. Okay, we've got another one circling here. So that was biotech. And then I missed a couple of really good short opportunities, which students that I've mentored actually took the trades, and we talked about them. One was, whoa, that one went right over my head there. And maybe we do have attack of the birds here. We've got some more. There's another one coming right at me here. But we've got 4 now. If we get to about 10, I'm going to get the hell out of here. but Tesla and WWE, you can go to those charts. Perfect short entries. We got reversal signals at extended levels, and I didn't take those. I got people that I've worked with that I've showed how to do this actually took the trade, took the lessons, and I did not. So I was a little bummed out about that. And then, that's basically it. It was a pretty good week. And key takeaways, continue to watch momentum sectors, stocks, and relative strength sectors and areas. They continue to be the plays in the market. If you're not in those, you're probably not making too much. Number 2, build an overbought shorts list like Tesla and WWE. There's opportunity in these extended markets. While our focus is to go long, there is opportunity to short some of these extended areas. And then finally, Miguel, it is beautiful out here. Finally, don't worry about precise entries. I missed a couple of spots this week by trying to get a little too cute. And biotech was the big one. There were a couple of other areas. I learned my lesson, and with X, I didn't wait for the perfect entry. I just entered when I thought it was a good spot to enter. One more thing here. This week, I'm going to focus on gap down long. So stocks with bad news have been reversing in this market. So Amazon, Google, Coors, UA. Google and UA I took in my trade report account. Amazon and Coors I took in some other accounts, but the gap down reversals have been working fantastic. So I'm gonna be watching those going into the week. Now we have Monday off. Tuesday's the first trading day. I'll put out the free weekly report. So you guys who are bulls on Wall Street, on the email list, you'll get the free report, and we'll talk about some of the gap down reversals. So keep a lookout on that. And if you're not signed up, definitely sign up. It's free. So do that. And then those of you who are trade report members for the premium service, we're going to get into the micro and really dig into some of the focus list stocks we're looking to trade. So, all right, guys, that is the big picture trading review for the week. I'll see you guys, and we're going to have a fantastic week this week. Talk to you guys later.